Welcome to this webinar on building a data-driven treasury. My name is Marielle Barkley, and I am the editor of this award-winning Global Treasury Leaders program, which is organized by The Economist and sponsored by Deutsche Bank. The program's objective is to share thought leadership and to connect treasurers around the world. We do this through a series of activities every year, which include summits in different regions, and we're about to have our EMEA summit next week in London. We also have webinars like this one you're joining today, white papers, interviews, and an online community where we host these webinars. The community is open to corporates only, and this allows treasurers from all over the world to connect and exchange ideas on any topic of their interest. It is totally free, and I'm now going to send you a link via the chat facility so that you can join if you would like to. Just remember to choose the Global Treasury Leaders Network when asked what groups you would like to join. You can join as many as you like, but just remember Global Treasury Leaders Network, which is this one where you'll find all our contents. So we'll put the link on the chat, and but going back to today's webinar, the idea is to make this session as interactive as possible. So please ask as many questions as you like using the questions tab on the right-hand side of your screen. And please send them as soon as you think of them so that you don't forget them. And we will bring them up when appropriate. So without further ado, please let me introduce our chair, Damien Glendenning, who's a former treasurer at Lenovo and currently chairman of the advisory board of Complex Countries. So with that, Damien will now introduce our speakers. Damien, over to you.
Well, thank you very much, Marielle, and thank you to everybody for joining. And please don't feel shy about submitting questions. I will see them on my screen and I will pass them on to our panelists. So it's a great pleasure and honor to introduce Catherine Hill from Salesforce and Mario Del Natale from Johnson Controls. They will introduce themselves in more detail in a few minutes because I'm sure I will not do justice to their illustrious biographies. And also many thanks to Claudia Valesis-Wallraff, who's joining us from Deutsche. And again, thank you to Deutsche Bank for sponsoring this. It's very useful to have this kind of discussion. So I will be very brief. The objective today is we'll talk about data-driven treasury, about doing everything based on data. And that's wonderful, but it does tend to overlook the slight technical issue, which is you actually have to get the data in the first place, preferably bring it into one place, hopefully have it sometime while it's still reasonably fresh and useful, because if it's 6 months old, it's of no use to anybody. And also hopefully make sure that it all makes sense and that when you get two different sources which should have the same data, that it actually is the same data. And as we all know, this is a significant challenge, and it's actually one of the things, my own view of treasurers is that we tend to operate a cottage industry where we're getting data from different sources, trying to make sure it's complete, and then checking it against other sources and investigating the differences. And I think we probably all feel that we have better things to do with our time. So with that, and in addition, the two companies we have today have been on fascinating journeys where they've gone about solving this problem in innovative but different ways, and I think we can all learn from what they've done. So with that, I'll be quiet and I'll pass on to Catherine to explain to us how Salesforce have approached this critical challenge.
Good, thank you, Damien. I guess I'm introducing myself as well. Okay, so I'm Catherine Hill, Senior Director of Global Treasury Operations at Salesforce. Been with Salesforce for 8 years, the last 4 based in Switzerland, overseeing the international treasury operations for the company. In a prior life, I was a relationship banker at Wells Fargo, but that's long forgotten at this point. So I guess a bit about our challenges with data. I think one of the core challenges we face is bringing data together, as you mentioned. So together, obviously, from the bank into the company, but then once the data's in the company, getting it from all the disparate systems kind of together in one place so that we can link everything. And as we were just discussing prior to the call, at Salesforce, we are bringing bank data into our TMS system. And then what we've been trying to do as a cross-functional project across finance is to build a data hub where we bring data from different departments together in one place, in kind of a data lake. You know, I think the challenge that we're trying to solve is that we do have many systems. Data ownership is spread across the company, and honestly, it's still a challenge sharing data and making sure people are comfortable sharing the data across departments, because as you mentioned, we're not always speaking the same language. Sometimes we're calling things the same thing, but they're really quite different objects. So we have to really invest a lot of time in making sure before we put that together that we are speaking the same language. Also, you know, knowing how this data is going to be used by all the various end users. So making sure there's proper controls in place, especially if it's going to be used for something compliance related. You know, we really need to make sure that from the get-go that data is, you know, solid and has standardization and proper controls. So we're taking all the data and putting it into this hub. What do we do then is we have a visualization tool that sits on top of it in each of the various departments, including Treasury. You know, we have trained our people to become subject matter experts on this so that they can actually leverage that information and build out what we need in the business. I think, you know, a couple things come to mind. Something that we've had to invest in is the people. So making sure people have the right skills to do this type of work. We are, you know, to kind of get all those systems together, all the information from the systems together, we are relying on our IT department. But after that, it's actually, you know, the Treasury department taking the information and understanding the data and figuring out how to put that, you know, in a way that is usable for us as the business. And it's key that, you know, we're thinking through how we're using that information for decision making. I think I'll pause there if Mario wants to add anything.
Sorry, if I don't, please go ahead, Mario, because I got a couple of questions. Go on, Mario.
Okay, thank you. So my name is Mario De Natale. I'm from Johnson Controls. I joined Johnson Controls a long time ago, back in 1997. So it's a long journey with Johnson Controls. And so I'm responsible globally for all about Treasury application or digital solution for Johnson Controls from a Treasury point of view. It goes from payment factory to TMS to trade type of application, bank account management, whatever you may think about. And so basically, as Catherine, we have a lot of ERP around the world, more than 180 instances. And we took a different approach back in 2008. It's the time when we built or we created shared service centers. And because as well of our banking strategy being one bank by country or one bank branch by country, these guys came to us and said, okay, it's nice to have one bank by country, but what to do? We need to have one laptop by bank, one token, whatever you may think about. So we created a payment factory where all our banks, all our ERPs are connected to that payment factory to do what? To make payments, one-off payments, bulk payments, sending check files, whatever you may think about, but as well to get the bank statement, end of day, intraday statement, status, feedback, messages from the payment that we process. And so we thought about this and said, well, we have all the information inside that payment factory. And so basically, since day one, we thought to use this data, so back in 2008. So we went through different stages, right, on how to make it happen. At the very beginning, we rely a lot on IT to make it happen. But you may know as well that when IT and Treasury or finance are different words. So we need to speak the same language. And I already mentioned this to that, but it took, for instance, 6 months to explain what is an opening balance plus the movement makes a closing balance. So when we have to spend 6 months to understand that, we decided to be agnostic from IT. So it's true that my profile is a little bit hybrid because I've got an IT background, but as well a finance background, so it helped obviously Treasury to build this. And so we are completely agnostic from IT, not from an infrastructure point of view, but from, I would say, from a visualization an aggregation of data. And so basically what we have built, because we have all this data in one single spot, I would say, we have created close real-time position worldwide, right? Using all types of data, bank statement, intraday statement, payment not yet on the bank statement, all that kind of things is refreshed every 30 minutes and available within 5 minutes. And then as well, analytics on all of the payments that we do, analytics on the movement, so we can tag the type of movement that we see on the bank statement easily. We can tag the type of payments that we do. So we have a lot of analytics that we can use even to forecast based on historical data, right? So we can forecast these type of things. So it's the approach that we have taken to be a little bit agnostic, and maybe somebody will say, how can we have somebody from Treasury being IT, because this costs money, it's less expensive to go wherever, whatever, right? But okay, but we have to, if we have to spend, I would say, a lot of days or to explain something, where is the cost, the face cost value, right? I mean, is it at the Treasury side that explains something, or is it at the IT side that must understand things? So this is the strategy we have taken. So is to do internally in Treasury, and we have an application based on Power BI that really provide us real-time type of data, but as well provide us the possibility to analyze our data in a different manner, different views, things like that. Here we go.
So, Mary, I think what you've said will resonate with everybody. I think we've all come across the challenges of dealing with the IT function. Not only do they not understand what you want, but also they don't necessarily share your priorities, right? Is this something that you've come across, Catherine, that I need this now, and the answer is, well, we'll put it in a queue and it can be done in 3 years' time?
Yeah, all the time.
So how do you manage?
I think everyone can relate to that. You know, we are a technology company, but a lot of the technology resources are getting funneled outside, not within Treasury, unfortunately. No, I would say, you know, we've tackled this issue in a few different ways. The TMS system, we actually do manage on the Treasury team. So for that piece, we are IT agnostic, I guess is what we're saying. But really just for that one piece, we still have to partner closely with IT when it comes to connecting to anything. And actually that includes Swift. So we have worked with our IT team on building that Swift connection or connections with any other systems within the company. We do run into challenges not getting prioritized, even with this data hub. You know, in a perfect world, everything's already in there. But the truth is there's like a long list of people who want their systems in the data hub. So we've had to build workarounds. That's possible, luckily. Our team does have some skills to kind of figure some of those things out. So I think having technical skills on the Treasury team is very useful when you're talking about navigating challenges with getting IT resources. But I think something that Mario said that really hit the nail on the head is, I mean, I can't ask IT to build me something exactly what I want because they don't understand everything. You'd have to educate them on Treasury. So there are aspects like using the data visualization tool that we're really investing on training our people in. So they are the ones taking their Treasury knowledge and then learning how to take data and organize it, I guess, is a way of thinking about it, so that it's in the way that we want it. And also building the requirements for IT. So when we say to them, we want these, you know, this is the data report that we're gonna, you know, make sure it gets into the data hub, like making sure the right objects are there, the right fields, the right kind of pieces get put together for the puzzle. So that is something I think we really have to make sure our team is capable of. Otherwise, nothing, you know, we can't rely on IT to be able to figure that out for us.
So this is an increasing trend, and I'd come back to you in a second, Mario, because I believe that you are firmly convinced that it's an investment that is absolutely worth making. But there's somebody called Harry who's already submitted a couple of questions, and thank you. And one of his questions is this approach something that only works for large corporates, or is it something that can come back into SMEs? And obviously, when you're starting talking about building IT expertise within Treasury, does that really say this only works for big companies?
Well, I think in big companies, we probably have more complicated problems and complicated systems landscapes. So I think that's where, you know, it starts to make sense to have someone who has a stronger IT background. But I think at all corporate sizes, it's useful to have someone on the Treasury team with some technical knowledge of some sort, or at least some savvy and willingness to learn. There's a lot you can do in Excel, for example. Someone who gets really good at, you know, building macros, like there's magic that can happen there. It's not like it has to be, you know, all AI and bots. It's, you know, having technical expertise on the Treasury team can be quite useful, I think, across the board.
And maybe to this point, Damian, what I have seen in many SMEs, they need to do more things perhaps than people in the treasury departments of the largest corporates do, right? So your job in a large MNC becomes very siloed or very specific to your mandate. So in a SME, you are usually doing more things, and I have seen in SMEs more IT people embedded into the treasury department, because as Catherine was mentioning, so many people are working on Excel, many people are working on Tableau. They need to be more pragmatic than waiting for the next SAP implementation or the next DMS implementation to happen. So I think I would say that SMEs are luckier that they have the ability to be more pragmatic and more hands-on on how the technology in their companies develop. They are also not subject to that much technology governance, etc. So which sometimes when you are in a large MNC, you miss it.
Yeah, I like the term you used, technology governance. I'd call it bureaucracy. So yes, in an SME, there's often a lot less of that. So Mario, to come back to this, by the way, there's another question from Harry, which I'd like you to address, which is, has SWIFT become your payment factory? Before we get there, I think in your view, it's very clear that this is an investment that is really worth making. Is that correct?
Yeah, correct. But before I'm responding to that, it's not a big IT profile. IT means a lot of things, but I do believe that Treasury, like any other department, must have people that understand data scientists, whatever you may call it now. It's what we need to make sure that we understand the data. And I do believe that every young people going to the university today, whatever things they do, they have courses on data, whatever you might think about, and as well, all the type of things. So I do believe that Treasury must go as well into the direction, right? So now back to your question, I mean, yes, I mean, it's about SWIFT, right? So we have, since day one, we decided to go for SWIFT, right? We are just connecting to our bank for inbounds and outbounds via SWIFT. The only thing that we have done is that to allow to, I would say, to avoid a lot of cost or according to, because of SWIFT, we have created what we call gateway or bank GUP or bank gateway, because it depends on your BIC code. Right? My BIC code is a Belgian BIC code. So we have set up a lot of bank up in Belgium so that all our connectivity, all our costs or our payments are processed as local payments and not like cross-border payments. If I pay, for instance, I give an example. If I pay Citibank to China, right, it goes through Belgium, and after it goes, it reroutes again internally through the Citibank network, and so my cost is just a domestic cost, right? It's not like a cross-border payment because my BIC code is in Belgium, my connectivity is in Belgium, so from a SWIFT point of view, it's just a local payment. So yes, and on top of that, what I like with SWIFT, now people like or not like, but at least everything is traceable, auditable, and you can go wherever you want. If a bank say, no, I didn't receive it, your payments, they cannot go against SWIFT, right? So it's what we decided to standardize not only the connectivity, to standardize the format. So each and every bank that we deal with across the world use the same format, because the content must be different depending on the local regulation and the type of payments, but it's always the same. We went already live back in 2008 with the ISO 20022, already from day one. So it means that we can switch from one bank to the other, from one day to the other. right? Because it's the same format, standard format from Swift everywhere, wherever we are.
Okay, so I think you've answered another question from Harry, which is that although you only use one bank per country, at the end of the day, you're really using the payment center as a sort of in-house bank. Is that correct?
No, not really, because when I say one bank by country is because we have one cash pool by country, right? And we have an overlay bank that to fund all these cash pool, right? And so that overlay bank use as the role of the in-house bank. So we decided to not have an in-house bank. It just controls back in 2014, and just to outsource this type of solution to our overlay bank, and I can name it, it's Bank Mendesgans, which is only doing this, right? It's not a retail bank. It's just doing cash management, and it's our cross-currency, cross-country cash, national cash pool, right? So we do not have in-house bank in Johnson Controls, right? We have cash pool wherever we can, a ZBA cash pool wherever we can, plus that overlay bank that has an umbrella to all our cash pool.
Okay. If I can just come back to something else you said, which is that you do process everything as a domestic payment within Belgium, but of course you're located in the United States, right? So this is an innovative structure for reducing transaction costs. Could you explain that a little more?
No, basically, let me rephrase it. So we have 3 treasury centers, right, in Johnson Controls. One is in Milwaukee, right, in Europe. We were in Belgium and Luxembourg, in Shanghai. So the treasury in Belgium was the one really leading the project. So basically, the treasury Belgium has the big code with the Belgian big code. So basically, what I'm saying is that when we implemented Swift, we created a Belgian big code, right? And we created as much as we can all these bank up in Belgium, right? And so it doesn't matter if we are an American company or the payment is done out of China. The most important thing is that the big code is linked to a certain country, which is a Belgium one, right? And therefore we try to route all our payments through our bank as much as we can through what I'm calling a Citibank hub or ING hub, whatever bank that we have, via Belgium, to make sure that all these payments are treated or processed as domestic payments. Because the bank is in Belgium, the hub, and our big code is in Belgium, everything is processed as, I would say, domestic payments.
Okay, but you still must get cross-border fees in there somewhere. Anyway, so if we can move on, because there's another question here about building everything off the back of Swift and your payments hub. Does this mean that you're sometimes missing information? Because I agree Swift has many benefits, but it does also, it's not the world's most data-rich environment. Let's put it that way. There's often information missing. And secondly, are you limited by the fact that you've only got to you can only use banks that are on Swift, for example? And does this really mean that you get all the information you need?
So what we need is, as I said at the very beginning, so we have as well intraday statement. So, but I don't know what type of information the person refers to, but we have whatever we need, because again, the solution is not about what we get from Swift, but it's what we have as well on the payment factory, not yet at the bank side, but already sent to the bank, but not yet on the statement. So basically, what I'm trying to say is that thanks to the intraday statement that we do receive every 13 minutes, every hour, wherever the schedule are, whatever the schedule are, we do have all the information that we require to fund each and every cash pool accordingly in time before the cutoffs and all the kind of things. So we have all the information, right? Even if the payment, let's say that we send a file of 10 payments, one payment has been rejected, so you cannot take it into consideration for your position. I've got that information as well. So we've got everything that we need to calculate in real time again, okay, within the 10 minutes or 5 minutes refresh, whatever we need is there via Swift and via our payment factory to have the right position so our cash manager can take the right decision to fund the company.
Okay, so I think the question related to, so I think that's really the answer, that the question related to things like investments and information from payment service providers, obviously that's not really the way you work. You're looking at what you initiated.
No,
right.
not really, right.
Okay. So Catherine, if I can go back to you, because one of the other challenges when you bring all of this data together is people often have different cutoff times, you know, that sometimes the information may be in a system somewhere else, but it's not coming through to you. So you may get things which apparently don't match, but that's simply because there's delays. Is that a problem that you've come across?
So I guess the question is just timing of when information comes in and how we're using that. Yeah, I mean, I do.
And how quickly you get it, because again, it's important.
Yeah, I don't know if you're trying to get towards real time, but essentially, you know, I'll let you lead us there. Yes, it is a challenge. I mean, I think timing is something that's important to understand within the organization when information is relevant. We have it set up so it works for our structure. Part of the way we use the information is based on the timing as well. So I think we've figured out how to work around that. I think it's important, I guess, without getting too much into where I think you're leading us. I think it's important to think about what is critical when, right? So it's not necessarily like essential that all information is there at the same time necessarily. It's tempting, I think it's tempting to say like all the information should be there instantly, real time. More data, faster data is always better, but I think what's crucial to focus on is what information is needed for the business decision that needs to be made at that moment. So for Mario, it sounds like every 30 minutes they're needing some sort of refresh of information. But I mean, is someone really checking it every 30 minutes, or is it certain periods of time where that relevance of data is important? So I think it's important to think about how does the marginal information that you could be getting by having it faster impact the decision you would be making, and is that critical to address?
Oh, Mario, and by the way, the quick answer is yes. Obviously, you know me. I'm a big believer in real time, but it was also more that sometimes you find that there's a big data feed that hasn't come in yet, and that means that the position may be seriously out. So, Mario, clearly you're getting the information every 30 minutes. Do you think there's value to having it that often?
Yes, I do believe that, because as we mentioned, the cutoffs, right? So we have cutoffs more or less because we are working on a 24-hour basis, 24 hours across the day from Asia to the US. So, and we have obviously, depending on the countries in APAC, depending on the country in Europe, depending on the countries in Americas, we have a different cutoffs. So it may be that from during the day there are maybe within a couple of hours of 1 or 2 hours with nothing. But I can see that we have always, I would say, data coming across the day at any time, as well from the TMS. When we have, for instance, we have to pay effect, we have to make the settlement of some effects, we have the intercompany loans, we have dividend to be or equity injection. Everything is coming at any time during the day, and so that refresh really help us to get the right position. Right, and again, as I said, we are working across the world, right? And the cutoffs are not always the same. Okay, one could say that you can try to define that every day at noon, for instance, everything should be done in Europe or in APAC, except that the reality is that it's not the case, especially at the end of the quarter, at the end of the fiscal year. We need to get, or the end of the month, we need to get very close to our position, and so to get a refresh every 30 minutes makes sense. And to be honest, right, the refresh takes only 5-10 minutes, so it doesn't harm. If the refresh takes only 5-10 minutes to take the latest information, it doesn't harm at all. It doesn't harm at all, right? It's just that it's done automatically. It's not somebody that has to push on a button to refresh. It's done automatically via some schedule, right? So it makes sense.
That's important. I'm going to reveal my age, but a long time ago, I was working with a for a very big IT company where we'd installed an intercompany system and we wondered why we were getting different numbers. And the answer was we had different cutoff dates for the same transaction on both sides. I think everybody's had that kind of experience. But if I can turn to you, Claudia, because you've been patiently listening so far, and again, thanks to Deutsche Bank for sponsoring this. When we had the preliminary discussion, you gave some interesting feedback that all of this work of getting information in regularly, whether it's real time or not, it doesn't really matter, but it's certainly a lot quicker than it used to be. You see some interesting uses for that, which not everybody necessarily agrees with. So I'd be interested in your view of that, and certainly what we're seeing with Catherine and Mario, I think is fantastic and very interesting. Be interested in your comment on how this compares to what you see in other clients.
So maybe we are focusing the conversation a lot only on Treasury, but what we have observed in the last years, especially with the influence of COVID. So the treasurers are still getting used to this new world where they need to work to look at end-to-end processes. So with the supply chain disruption, with COVID, with all these tail events that occurred, the treasurer has needed to work closer with other departments, and that so that's when you need. So before we made a survey, an interview to some treasurers just before the pandemic. When was the last time that you talked to the procurement head? And it was like 3 years ago. So during COVID, everything became about how much money do you have now in the banks, what is happening, how much do we need to pay? And for that, you need you need data together. You need all the data in a single place. And the real-time visibility for what's happening in the bank, it's not only relevant for the treasury, it's also relevant for the procurement guy, for the sales guy. So in a world where risk is so high and you need to wait for the payment to occur to unload the ship that it's at the that it's already waiting to be unloaded. So there are various use cases. And real-time data, it's something that it takes you a long time to get used to it. But once you have it, you realize how much you needed it. And maybe, Damien, what maybe you found controversial, I am a big fan of bringing all the data together. I am a big fan of automating as much as possible. And stop operating in silos, again, looking at end-to-end, and the banks are involved at the end. The banks play a role for everything, for connecting the world. So my vision of how the world and the treasury world will operate in the future is once the data is together, once we have solved the issues of having multiple SAP instances and not having visibility of the data, everything will be which bank products, how much liquidity needs to be invested, how much needs to be hedged, will be calculated by the machines, and maybe these machines will be connected to the banks, and the banks will execute instructions automatically, and the interaction between the bank and the corporate will be minimal because everything will work like with the FX algorithms that have been in place forever. So I don't think we are years away from it. Well, we are still years away from it, but I don't think it will take 10 years. I think it will happen in the next 5 years.
Well, I think that is quite controversial. So, Catherine, what's your view on that?
I mean, I think it's great to have a vision of the future that's super efficient like that. But I think it would probably take a little bit of time to get comfortable with, you know, the systems automatically executing with the bank and kind of taking that decision out of, you know, the Treasury's hands. But at the same time, I could see a world where, you know, there are certain transactions that are maybe below a certain threshold where they don't, they could be reviewed after the fact if the risk isn't substantial. I mean, sure, it sounds like a crazy cool vision. I'm not sure we're there yet. It takes me a little bit of time to wrap my head around it, but I think it's quite interesting.
There are like companies like you, Catherine. There are other very large MNCs that have already decided even to drop their TMS. They are just building their own data lake to bring everything necessary. And for that, I mean, I'm not telling that to connect to the banks, but if you are connected to FXGo, FXAll, or or 360T, it's a single workflow, right?
Suddenly you have bots trading and placing orders. Yeah, I mean, I get where I get where you're coming from. We're not there yet though. There's not corporates doing that already. Bots trading with the bank.
I think
no bots trading, but automatic trading, it's happening.
Automatic, yeah.
But we do use FXAll obviously, right? And it's working fine. And I do believe that we are all for automation. That's okay. But maybe I'm just questioning that you may have Deutsche Bank some logic to automate all kind of things. Another bank will have other logic. So I mean, if we have only one bank and we can rely only on that bank, maybe we can do the automation. But if we have multiple banks, we don't know how these guys are doing their coding behind, and we don't. And so each and every bank will have their own way of automating things. So maybe we will be there, but we have really to pay attention because you have your logic. Some others have other logic. And by the way, Claudia, you are right. I think I see more and more, and specifically for Deutsche Bank, because we are in a close relationship with you.
I am representing my own views here, not Deutsche Bank.
No. But what I'm saying is that banks or even SWIFT are becoming as well TMS providers, right? Because they are providing a lot of products that were only on TMS a couple of years ago. Now banks, even SWIFT or whoever else, we are providing these type of services that maybe the TMS provider must think about how to change the paradigm, because you as a bank are taking over from them.
Well,
somehow.
Well, I think again it will take a few years until the technology is matured enough. In those years, I mean, many of the bank products are already commoditized, right? And if they are commoditized, that means they become more standard. And again, platforms. I believe platforms like 360T, FXGo, they will play a role on making this automation possible. And again, the bank will always be only executing the instructions from clients. The question is how the client comes to making these instructions. So today, you would go and download all your data. Okay, let's not say in Excel, you will download it in Tableau or in something fancy. You will run your models, and then you will make a decision, and either you type it in Bloomberg or you call the bank. So there are many possibilities to automate these processes, but the number one requirement is to have the data together.
Yeah.
So because if as a treasurer you don't even see your accounts payables and receivables across the globe, then you cannot make any decision, right? You cannot automate anything if you don't know what you need to pay. And so the definition that we are using now on what is cash visibility. So do I know how much cash I have? Now it involves not only having access to your bank balances, but it's actually knowing exactly how much you need to pay and how much you are going to receive and when. So that is the modern concept.
Well, two things there. First is, Claudia, are you seeing a lot of corporates who are actually now doing FX trading automatically? Because in theory, if you believe the data you're getting, there's nothing stopping you hooking them.
Not many, but many treasury management systems allow you to automate certain things. So it's very simple. You just need your cash position, a forecast that you more or less trust and some parameters around it, and the TMS sends the execution instructions to any of the machines, right? Against the Bloomberg Refinitiv, one of those, 360T. So it is happening, and some sophisticated corporates are already doing it.
Okay,
nevertheless, that many treasury management systems, they are not able to consume the data from the ERP system. So, which is the main issue, that the main challenge for treasury management systems, that they are not able to bring the forecast that includes the ERP data.
Well, you've just mentioned another dirty word, and we have some questions on that from the audience, and that is cash forecasting. I think we all agree that, first of all, cash forecasting is extremely difficult, but secondly, it helps greatly if you have an accurate idea of the current situation. Mario and Catherine, have you found that the investments that you've made in these data processes have improved cash forecasting?
I think that's a big driver of what we're doing. And just to be clear, I'm not managing FX, so some of that, I don't want to speak to the trading with the bank directly and how we're looking at that. But cash forecasting for sure. I mean, that's something we are, constantly trying to improve. And of course, there's different ways of using the cash forecast. There's the kind of really short-term stuff, there's the longer view, and then there's the kind of company level cash flow analysis. I think all of those are something that we're constantly looking at, and the requirements for data are different. The timeliness of the data is important if we're making business decisions to do certain things. So yes, I think that's a big driver of why we are focusing on data and timeliness of information.
And have you found an improvement since you brought more data?
Yeah, I think it's incremental, right? So you have the vision of where you want to go and what you're trying to achieve, and then you kind of start putting the puzzle pieces together. And then we're constantly looking at, okay, this data, historical data, for example, has to be, in a certain way, kind of clean. So you need someone who's like a data steward who makes sure the data that you're consuming is actually something that can be used for forecasting, right? So there's that element, and then there's of course the real-time information from the bank in certain periods where that matters. Yes, I think it's a constant work in progress, I would say, but definitely that's one of the key benefits, I think, of the work we're doing.
How about you, Mario, as the payment factory?
As said at the very beginning, we have hundreds of ERPs, so to get forecasts from all of them, it's a little bit complicated. And although we are now harmonizing on two ERPs, being SAP and Oracle Fusion, nevertheless, the point is that today we can forecast based on historical data. At least from a cash management point of view, we have a time horizon of 2 years on which we can see what did happen a year ago at the same period, on which we can apply a certain, I would say, growth, annual growth or season factor. And so you can recalculate, you can try to anticipate what could be your position, or what will go out, or what will come in based on historical data, and applying some parameters, and you can play around with it. So this is based on historical data that we have in our system, and we can play with it, and it helps at the end of the month, at the end of the quarter, at the end of the fiscal year, to anticipate what could happen. And as well, but beside this, we have still to work with the BUs so they can provide as well their forecast, because it's what it is. So because as you know, our data is just the payment factory, so it's only actual data based on its historical data or what happened during the day, and so we can anticipate. But forecasting based on historical data, it's what we do since I would say a year now, and it's working fine. It's not optimum, but it's what it is. Next steps would be to get as well forecast from the different deals and load it into our systems to get it as well in our position.
Big challenge. So, Claudia, what do you find with your clients? Because am I right in thinking that everybody struggles with cash forecasting, and it's the big problem to automation?
Yeah,
Sorry,
we made a benchmarking survey with the Association of Corporate Treasurers earlier this year, and cash flow forecasting again was one of the main issues. So we started researching into that topic, and basically everybody wants to solve for cash flow forecasting, but and the cash flow forecasting solutions in the market that use ERP data offer a superior accuracy compared to the ones that don't do it. The problem is that they are more difficult to implement, they are maybe more pricey, and the question is if you want to pay for it, right? But because cash flow forecasting actually is not the end objective, cash flow forecasting is the means to get efficient funding, investment, and hedging, right? So that is the objective, not the cash flow forecasting per se. So I think if you combine, if you talk about a more efficient funding, hedging, and investment instead of just looking at cash flow forecasting, then the ROI of implementing a more sophisticated solution makes sense.
Although I think that's going to become more important because, let's face it, for the past several years, cash has been basically free and you didn't earn anything with it. So it didn't really matter how efficient you were, whereas that obviously is changing in the new interest rate environment. But Mario, you were saying something which I didn't quite catch.
No, I think that, cash forecasting is key. The issue as well, it's not the data, it's the understanding of the data. Let me give you an example, right?
Yes.
We, for instance, our BUs in the States, okay, what would be your payments for today, with the value date of today? And they will say, yes, we have sent a payment file for $1 million with the value date of today. But they are not taking into consideration that in the US, there is one float day. And so basically their forecast is already wrong because they're not taking into consideration by when the settlement really happened or by when our account will be hit, because they are not taking into consideration the floats, whatever that may happen, or the checks. We don't know by when the checks will be paid or when we're going to receive the money on our account. So cash forecasting is key, but as well, we have to put logic behind this to take into consideration how the payments are processed within a given country, right? So again, we go in the US, you send a file today with a value date of today, but the value date is tomorrow, right? So we need to know that, and the cash forecasting system will have to take into consideration that in the US, there is one day float for certain type of payment type, right? And in another country, maybe it's 2 days, and some other countries is same day value date. So it's not only a matter of consuming the data, it's as well a matter of understanding on how this data will be processed at the bank side to make sure that the cash forecasting position is correct. I don't know if I'm clear when I'm saying that.
But presumably, after a while, you can parameter that in your system. But I agree, it's important. If I can just change.
Yeah, but you have to take into consideration the calendars, you have to the bank holidays and all that kind of things. If you have to add, it's not only a matter to add one day, right? Because if you add one day to the Friday, you've got on Saturday, no, it's not Saturday, it's a Monday, and so it's not so straightforward.
So this is why we still use these incredible machines called human beings. But sorry, Clary.
What I wanted to say is, with cash flow forecasting, a typical challenge that we have seen with some companies is also that many of them, and even maybe it might sound a bit incredible, it takes them days to reconcile. So if you haven't even acknowledged what you have sent and received, how can you talk about the forecast? So there is a lot of inefficiencies still in the process that need to be solved to get the ideal state. And the other challenge is we can think we need to bring the data together. Okay, we can have some technology, etc. But sometimes you need to do a lot of homework. Many of the invoices that are entered, sometimes they don't say what's the due date. Is there an early payment rebate by when? So all this information the treasurer cannot see it because it's not captured anywhere. So
that's one thing. The other thing is that the invoices that the accounts payable guys keep in the drawer, and then they put them in the system at the last minute.
Correct. So so when we were exploring the cash flow forecasting topic, they told us that the problem number one was the payments. And why? Because actually you trigger the payments, but if nobody tells you that you need to pay something, you cannot account for it. So and this is very common, Damien. I would say maybe 75% of corporates have this issue.
Well, I think Mario needs to answer that one. I'm sure you have a solution, right?
I'm sorry, what?
I can add something there if Mario wants to think about it. I mean, I would just say I think you bring up a really good point that the coordination between, you know, AP, collections, treasury is really essential. I think, you know, if you're a company that you know, prioritizes cash forecasting, bringing those relationships close is really important. For example, for us, we're actually kind of part of the same family within finance. So we are working all the time together, trying to improve that and kind of, you know, work together towards that goal, since it's so important for us. So I think sometimes it's just, you know, coordination from the corporate structure level. I think that can help some of that.
I think it also depends on how tight your cash position is. These things tend to work better when cash is tight. But Mario, the question was, in your payment factory, do you find problems with accounts payable inputting invoices late and giving you surprises?
I mean, the P2P does payments whenever they want, right? So even okay, we have specific, I would say, processes for intercompany payments, for cross-border payments, for payments. Basically, what's happening, and I do believe that all of us has the same experiences, that the P2P put maybe late invoices, put early invoices. They want to do it immediately, right? So, but yes, I mean, I don't know if it's, I can answer your question, but P2P has their processes, but whenever they want to make a payment, they do it. So there is no, I would say, things that will block them to make a payment out of our payment sector, except the cutoffs, obviously. But part of that, they can process the payments whenever they want.
But does this cause you problems with cash forecasting, or is it kind of on the fringes?
Not really, because I do believe it's because of our structure, right? With these cash pools that we have, with the cash pool that we have in each and every country, it's not that we have to think, and the overlay bank that we have, it's not that we have to think about to forecast correctly to avoid that we are on overdraft on a certain account or whatsoever. So because of the structure that we have, one cash pool by country, ZBA cash pool by country, wherever we can, and the overlay bank, forecasting is key, but at least we are not, I would say, we may have, I would say, intraday limit breaches from time to time, right? That may happen, but it doesn't really stop making payments because we have obviously overdraft everywhere, and we have that overlay bank where that we can use whenever we need money to I would say, between cost to fund the cash pool. So it doesn't really harm our cash position, because P2P does the payments whenever they want.
Okay, all right, thanks. Now, because we're reaching the end, there's one last question. And by the way, I'd like to thank everybody. We've had lots of questions. I think I've tried to address most of them. There may be a couple I've missed, and I apologize if that's the case. I'd like to thank everybody for lots of really good questions. But I'd like to finish with one which is for both Catherine and Mario, which is, if you can share it, what are the TMSs you use and what are the data visualization tools you use? And obviously, if that's information you can't share, that's understandable.
I'm not sure I'm supposed to share it on this. I would have to get clearance. So if anyone wants to reach out to me separately, I'm super happy to do any sort of treasury benchmarking, do it all the time. So That's my non-answer.
That's perfectly fine. Mario?
You said that sorry, your question was to share the TMS that we are using. Is what it was your question?
The question is, can you share the TMS you're using? Somebody's asked which TMSs you use.
I have no problem to share with it. So we are using as a payment factory. It's not a TMS, right? It's called Trax from FIS, right? And the TMS is Quantum from FIS, right? So and the visualization solution that we have used is Power BI, right? So basically we are extracting directly from the Trax database the data, and we are aggregating and putting on the visualization using Power BI, and we are publishing all these type of things in the cloud so that the company can have access as well to all these report analytics that we are doing out of Trax in that case, not from the TMS. TMS is used for some report, right? We have some what I'm calling hybrid report between the Trax and the TMS, but it's mainly Trax, and Quantum is really used to get the rates to make the conversion dollar equivalent and things like that, and other type of things. But it's mainly Trax from FIS that is used for a real-time position or whatever analytics that you may think about payments and movement and state.
Okay, well, we're very close to the cutoff, and we all agree cutoffs are important. So I'd like to thank everybody for a great discussion. Really appreciate it. And again, thanks to the audience for all the questions. Sorry, I think there's a couple of hands addressed. Claudia, is there something that you'd like to say before we finish?
No, I remain with my visionary view of the world, and I invite everybody to look at which data is required and which skills you need, as Catherine mentioned. So I think that is the most important thing. Lose the fear of looking at data, automating, and and that will accelerate my vision.
Well, it's very good to have a banker with a vision, so thank you very much. And again, thanks. I personally have enjoyed this discussion. I hope everybody else has and has found it useful. Really appreciate the great input. Thanks again to Deutsche Bank for sponsoring this, and thank you everybody for listening in. And with that, we'll sign off. So again, thank you.
Thank you. Thank you.
Thank you.